there, traders. Welcome to the Wednesday webinar. Typical 2 minutes late. At some point, we're going to get it, probably in year 2 of the show. So welcome. This is the Wednesday webinar. I'm Todd Gordon, founder of Trading Analysis. This is the most watched trading live stream show on, no, it's not true. But anyways, hey, thanks for joining us. But anyways, the response has been really, really good. So having a lot of fun doing these shows. The viewership has been really good. The comments have been good. Appreciate it. You know, the team here at Trading Analysis. Let's bring those guys in real quick and say hello. Good morning, guys. How are you?
Good morning, Todd.
Hey, Todd. Good morning.
So yeah,
good morning, Todd. Traders.
The show's gotten better because of these guys up here bringing a lot of different, a lot of different dimensions to kind of the show, but more so the business, the way we look at the markets. So yeah, expect a lot more from us in the future. Hopefully you're enjoying what you're seeing now. If you do, throw a thumbs up. If you would on YouTube, let us know. YouTube, who is owned by Google, who are the 2 largest search engines, as Terry just told me as we're discussing pre-show. And they just bought Fitbit, so they're getting into the wearables market. I had this discussion with Grasso and Fast Money. I don't care about Apple Watch, Fitbit. I still love my Garmin. I don't care. Do you guys have wearables? Do you guys wear a smartwatch?
I don't, but I like your choice in Garmin.
Right? It's not fashionable. Yeah. It's badass. It's upstate. It's outdoorsy. All right, well,
love it.
I guess I'm the only one. What do you have in Surrey, Alex?
I wear only clothes.
All right.
No,
they don't have any smart implants yet. So
I'll take your word for it, because all we can see is from here down.
yeah, maybe
I was waiting for you to slide in there, Alex, and be like, I only wear Rolex.
Yeah. that will be a Balkan thing. I'm kind of outspaced. So I have a watch. I have a watch, but it's I think it's similar to yours. It's a no-name Calypso. It's worth like $20, but it's nice.
Hey, man.
Slightly different.
You're good at Elliottwave. That's all that matters, right?
Yeah.
We're not trying to impress with anyone in the way we look, just the way we analyze the markets. So, guys, I always get yelled at. Is my audio better, viewers, traders? Hey, Grant says, angry Todd. No. Sometimes I get mad, and he goes, I like when we have angry Todd. No, I'm pretty happy today. I don't know. We only started a minute and a half late, which is completely my fault. Yeah. Feel good. Markets are in good position. Heading to Vegas tomorrow. I was up till, 11:30 here in the office working on Vegas presentations. Feel pretty good, unless somebody says something stupid in the comments and I got to yell at you. No, I'm not angry. How's the audio, guys? Is it okay? Should I turn it up a little bit, viewers? Or are we okay? Just let me know, and we'll keep going. All right, so everyone's quiet. We still have that 30-second delay. That's all right. I'll keep going. So, I was listening to CNBC driving in. Frank Luntz was speaking. He was talking to Kernan, and it just kind of occurred to me that they're polling millennials, which I just slid into the millennial. I'm like, I think it's 1977 as a cutoff for millennials, and they were doing this poll that. Are you laughing at me or with me, Terry?
Yeah, I don't know. I'm laughing at about what I think you're about to say, because I saw some millennial polls too. So.
Well, I mean, these millennials they're favoring now. The polls say they're 2-to-1 socialism over capitalism, and Frank was making the point that it's just in the wording, in the perception of the corporate mission, which is profits. And he was saying, and I'm paraphrasing because I just heard this about 15 minutes ago. I want to go back and rewatch it, but he's saying if you just reword it from profits to performance, the polling numbers switch drastically. And what it's leading towards is Elizabeth Warren is increasingly gaining traction. And Tudor Jones was just on there with, I don't know where he was. Tudor was talking. He was saying Elizabeth Warren comes in, he sees S&P 2250, which ironically is the Elliottwave International downside target. if Trump comes in, he's saying we see up 15%. So it kind of struck me coming in, and I'm going to talk about this in Vegas tomorrow. I do have the keynote, one of like 3 or 4 keynotes. I don't know if it's a keynote if you're one of 3. But I think we're going to shift from this period of a tweet-driven market from Trump to a poll-driven market. I mean, I think it's so easy to say every time is different, but I think for the first time, we are really going to be trading over the next year, because elections are 1 year from now based on polls. And I think, the market is really just going to get in their head if Warren comes in, she's highly anti-Wall Street. What's going to happen with the high ups at Wall Street? Will they start to shift from the left? I mean, the left is already turning on Zuckerberg. The high end, the ultra high net worth kind of Wall Street guys who lean hard left. I wonder if they will start to moderate a little bit. And ultimately, will that be a good thing for the stock market? It's one of those things where Trump came in and they said the market's going to get destroyed if Trump's elected. Well, futures were down 700 points that night, but then they came ripping back up 1,000 or whatever. I was trading every bit of it. I remember it. So just wondering, what's going to happen here, when the election occurs in a year. But I think in the meantime, I think we're going to be a very election poll-driven market within possibly a larger range. I don't know. Thoughts on that, guys? Or do we just want to move past the politics? And there was no political statement being made. Strictly what I'm doing is identifying the trigger for movement. Like, I think it's been Trump tweets and it's going to change. That's all I'm saying. Please don't blast me. Terry, I know you have something to say.
No, I prefer to keep the politics out and prefer to focus on the technicals.
But again, there's
me.
There's no politics.
Yeah, I know, but still, it's the things that move the market are predetermined by the wave counts that we happen to plop down and we say, aha, somebody said this. Go back and look. Oh, that was what caused that low.
True.
No, that low was going to happen regardless of whatever anybody said. So that's the way I look at it. I think we tend to like to see patterns and find the patterns, and we'd like to try to move it. The Elliott wave is a pattern of human emotion, tracking the human emotion in trading.
Right back on topic. I love it. Good for you.
Exactly.
All right, let's jump in.
Yeah. Let's go see what the hell's happening in the market. We're at all-time highs.
I want to stir it up. So we're at all-time highs. All right, let's jump in here, guys. I'll bring you
2,500 looks fine to me. So
2,500 what?
Downside for the S&P.
All right, so let's jump in. Guys, I'll pull you back in here in one sec, team. I'm just going to kind of kick us off as we do at the top of the show. Just look at the broader indexes. We are still working in Nasdaq position. We are on pin watch. I'll show you what that means. It's been fun. It's been fun trading. And trading, I love it, but it's been kind of boring and for a while, and it's changed, which is awesome. So let's jump in, guys. I'll be right back with you, okay?
Sounds good.
All right. So I love my team. They're great guys. So let's take a look at the S&P. Let's take a look at the Nasdaq. This is the main position that we are holding here. So we are still tracking 2 different wave counts. I'm not sure which one will emerge victorious, but here is one of the interpretations that we're looking at right now. Let me zoom in here. All right. So on the S&P, guys, we have made new highs. This range that I spoke about from May of 2019 was just horribly, morbidly, annoyingly range-bound, death by 1,000 paper cuts, which is what Elliott wave triangles are designed to do. They're designed to frustrate you right out of the market. And even though I really, really believed we were in a triangle, so yeah, that's fine. We'll just kind of hang out here. Didn't do a lot of trading in here, but now we're through the highs. So the question on the table here is this a C wave? Okay, is this a C wave? And we have resistance into the 3,200 mark, right? Now, if that's the case, we need to start counting a 5-wave move off of the daily down into the 195-minute. Okay, come on. And what we're seeing so far, and you guys will remember, We gave you this entry right here on the Wednesday webcast back on October 8th, a week ago. We said this is a must-hold level. This is support right here. I left it up just so we could pat ourselves on the back and say what a great job we did. But we gave you this on the Wednesday webinar. See, this is your entry, and we've gone straight up. So where are we right now? We're at the typical fib projections of what you'd expect to see in a wave 3, okay? We have wave 3 fib multiples compared to wave 1, okay? So you take the percent distance traveled here, multiply it by your typical fib projections, and you will have, let me just do this real quick, sorry. I just want to pull this in. Let me just make a quick on-the-fly adjustment, which this software allows you to do. This software allows you to just very quickly throw your fib multiples in. So if I hit Alt-3 right there, okay, 3v1, 161% is expected for wave 3 versus 1. So we're through that. We're actually up to the 200%. So we're at the point where we could start to see a little bit of resistance falling in wave 4, and I would not be surprised to see a pullback here in wave 4 of the same degree that this was wave 2, pulling back to the all-time high of 30.28. All right, so that's something I just keep that in mind, because I'm gonna, in about 2 or 3 charts from now, I'm gonna show you in the Nasdaq, what and the decision that we have to make that's on the table with our current position. But first, before I do that, let me get over to the other wave count that we are tracking here, which on the longer term will be the Nasdaq. Okay. This is a count that I think we introduced about last week or 2 weeks ago, which is very unusual, and I haven't seen many people discussing it, which is a complex W, X, triangle Y, completing 4, one more move up to go in wave 5. This, as I've discussed a couple times, this count originally came from Apple. Apple's been incredibly difficult to count in terms of Elliottwave structure until I came across a very simple explanation, well, not simple, but a complex explanation, which was this, that Apple from 2018 had done a big ABC down, and this is up for interpretation. You could call this a number of different things. This also does count fairly well as a 3, because you could break down 5 smaller waves in there, no problem. It's a little bit more dicey in here for the 5-wave move. But then this is what got very interesting in terms of the triangle 4. Did we just complete right here, and we're now moving higher in wave blue wave 5, okay? So the same conversation happens with the S&P, with Apple, as that happened in the S&P, in that we have 1, we have 2, a 1.618 multiple of wave 3 is at 260 in Apple. So we're starting to get resistance in the expected fib projections of what you would look for in wave 1 versus 3. So are we starting to fall into consolidation? So back to that Nasdaq, this is the count that I don't think a lot of people are talking about, that could be a wave 4 completion that brings us up to potentially 10,000 in the Nasdaq in a wave 5. So let's get off of the weekly, go down to the next time frame, which would be your daily. Okay, there's the completed triangle in Y of 4. And then let's keep breaking it down. And what's interesting here is, as I've been discussing with the team, we have a completed 5-wave move. It's a little difficult to count here. I don't have a high degree of confidence. Let me bring in the team here and put these guys on the spot. Guys, have you discussed at all what we're going to do with this Nasdaq from October 3rd? Do you guys have any thoughts on this? Because I've been purposely kind of leaving it alone and saying we don't have enough information yet to say, is this a completed 5-wave move, or is this like a 1-2, 1-2? What do you guys think?
I'm with you on that. I think at this point, it's a bit early to say, look, we've had a completed 5-wave move, and it's time for a 3-wave correction of sorts. If you take a look at the 2018 low and the 5-wave move that followed, we saw over a 2618 extension of 3 and 1. So it would not be out of the question to see this market becoming even more fractal and setting up for a 1-2, 1-2 situation.
Okay. So wait, go back. I was just looking at Slack for your schedule that you put out for me, Bennett. I don't see it. Just to make sure I stay on time. Go back to what you were just saying. Where's the 2618 in 2018?
So if you take a look, not utilizing this interpretation, the previous interpretation that we were looking at the end of last year, the lows as a five-wave move off the lows. So if you go to the S&P, it'll be a little bit easier for you to understand what I'm.
And if you
want to, I'm trying to illustrate.
If you want me to flip to your screen, I will. Just let me know. Or if you want
no, it's all right.
Okay.
So go to our. There we go.
Okay.
So that move off of blue A there.
Yep.
Right in the middle of your screen. We had a five-wave move there. Take a look at the extension of orange 3v1. Bring up a 3v1 ratio
huge.
there.
Right.
Exactly.
Right.
So just because we've seen a completed five-wave move post-triangle thrust, I don't think it's out of the question to see the markets continue and possibly be setting us up for the 1-2-1-2 possibility that you had discussed there. What do you think, Terry?
Well, I was noticing that one of our viewers, Christian, posted a little comment. He said, given the moves out of the triangle or terminal moves, one needs to be cautious. So if we are pushing higher in a fifth wave, it's not ready to get on those, to me, stretched out wave threes unless we are looking at a contracting triangle ending diagonal. Sorry, contracting diagonal. Everything you guys
just said is right. And that's why I'm kind of taking a laissez-faire kind of approach to this wave count, because we have a 38% A versus C fib projection, which is extremely shallow. I assume that's a foregone conclusion. The 61%, which is typical post-triangle thrust, is at 3294. However this fills in, I don't really care because I'm kind of trading daily and 195-minute charts in here. So for me, I don't really care if we're going to go down and do a wave two post five-wave move here. Okay, that's going to impact the Nasdaq position we're in. So maybe I'm not making sense. But I think the 0.618 relationship with C versus A is going to be the upside target. Plus, it's upside channel resistance. So to me,
you also have.
Yeah.
Sorry, you also have 127 there. If you project it from your orange wave 3 down to wave A.
Yep.
So the other option also on Apple, I think it's going to be a flat. So we go 335. That's another possibility.
Let me bullet. Where's 1272? Oh, that's a 3129. Okay. And then where's the 1618 come in? Above 3,300, I bet. 3,384. Okay. So yeah, it's like at this point, I don't think you can know what this is. There's two upside targets, 3120 and 3290 to 3384. Right? There's two upside targets. We're going to continue to stay long. I'm heavily long in my equity portfolio. We have a pretty good Nasdaq position on that takes us up to 8250 that we talked about last week. So and if you guys stop me before I transition over to the Nasdaq, if you want to talk about this anymore. But are you guys cool with that? Do you want to go over to the Nasdaq or go back to S&P?
It's essentially the similar story. So in the Nasdaq, so we got to take these baby steps in here.
Exactly. Exactly.
But yes, we're pushing higher in an impulsive move. The question will be is whether that will be a motive or a diagonal, right? So, or sorry, I guess I said that the other way around. Yeah. The motive wave. We're pushing higher in the motive wave. Is it going to be impulsive or diagonal? So you start to get if you start to get pause in momentum. Which I think the futures are opening higher again this morning, but they're very flat to higher. So
yeah, I think it's just too early to tell. It's best to be cautious as we kind of tread through this range.
Okay.
Yeah, from fundamental backdrop, I don't really see it above 3,200 for now. I mean, Fed is on pause. Elections are coming. Earnings are over.
Don't you think the Fed on hold's a good thing?
I mean, they're going to hold.
Before we get it, let me just finish this conversation, and then I definitely do want to have that. But let's just finish off the top of the show with the Elliottwave stuff, and then we'll jump into the fundamentals, Alex. I promise. All right. So here's the position that we're in. We've talked about this the last 2 weeks in the Nasdaq. We have a butterfly centered around 82.50. I'm trading this one in my IRA, believe it or not. So NDX. Let me bring this platform up out of our heads. Okay, so here's where we're up. I'm up just about 4,000 on this trade. It's centered around 81.50, 82.50, 83.25. I tried to do a little monkey business, and I changed my. I tried to adjust it and I put it back. So this P&L is not accurately representing what my actual P&L event is. I tried to make an adjustment. I didn't like it. I put it back. So I changed my average prices. I'm happy to show you the math here. But we are, looking to make in the proper original trade around should be 14 to 15,000 if we could get the move up to 82.50. If we go like this, account statement, NDX, we bought the fly originally for $11, and this is the adjustments I did, which kind of screwed up my average entry. Didn't create any kind of P&L event, but we got the trade for $1,100. I did 2 of them, so I put $2,200 in. We can now exit the trade for $30. So we're working on a triple on this. The reason that I'm patting ourselves in the back, we're just so far we have 2-to-1 reward to risk, almost 3-to-1 reward to risk ratio. And the reason I'm focusing on this is the whole discussion that we just had with the team about what we're doing with this S&P and Nasdaq count is going to determine how we handle this trade, the open P&L on this 82.50 center butterfly. We are now at 82.10. Right, 82.50 right here on November expiration, 9 days from now, is going to give me like 15 grand profit on 2,000 of risk. The problem is, now that earnings are mostly over, as Alex just said, the major earnings are over. Is this a 5-wave move? And if it's a 5-wave move, we need to get out of this trade and protect profits and stop falling in love with the big home run. And just take what we have, if this is a 5-wave move. If this is 1-2, 1-2, we're going into a wave 3 and potentially a little wave 4 sideways. We're going to hold on to it and try to maximize the profits. So that's the question on the table. Guys, what do you think about this?
Well, we did advise our clients to, if they had multiple contracts, to go ahead and take half profits, right? Yep. And we did that half profits when we were already at a double. So now you're running with the bank's money. True. So it depends upon how you want to perceive your profits as your risk, and continue to push higher. You got 9 days left, I believe, to expiration.
Yep.
Is that right?
Yeah. The 15th.
9 calendar days.
Right.
7 trading days.
Right.
So as we start pushing closer there, if we inside of this move up, we do need to see a 4th wave in that smaller time frame. And if we start getting the pullback in there right approaching expiration, you could see this P&L move rapidly to the left.
Perfect.
Of your pin. So that's why we got to monitor it really quickly, and you're probably going to have to set yourself up with some kind of a absolute minimum stop. I'm going to take it off the table.
Exactly.
Unless you're just a big gambler.
I'm not until I get into Vegas on the craps table. All right. So Terry, queue up. I see you're ready for the sector rotation stuff. The other thing is, we'll talk about that in a sec. We're seeing better response from international markets. You're seeing emerging markets move up. You're seeing the all-world ex-US ETF move up. We're starting to see participation from European markets, from Asian markets. I like it. You're starting to see rotation back into rotation and sectors that were not really doing too much in the last month or two. This rally in October was being led first by technology, then by communications, and now we're starting to see a rotation into financials, materials, industrials. So the rally is becoming much more broad-based. The breadth has always been good, in my opinion, in this rally. But now that we're seeing these kind of second tier, which I consider tech and communications, sort of the higher beta, those are the growth leaders. Now these are the older economy, foundations of our economy starting to participate, confirming these breadth numbers. So it's good. I like the rally. Plus, as I'm saying, we're seeing emerging markets. You're seeing European rally. EEM is on the cusp of breaking through 44 here. FXI, the Chinese ETF, is looking better. So I'm bullish. I am, in fact, very bullish. I don't share Alex's hesitation, and sometimes when I've disagreed with Alex, I've been wrong. I still have, a pretty good in this original portfolio. I actually did put more money into my investment account to actually participate more on the upside. So we have a pretty good book of long holdings right here, and I'm going to continue to add. The other one that I will show you here is AMD. AMD made a move. Chips have been going very much tied to what we talked about with Asia, right? AMD has a long, and chips in general have a pretty good correlation with what's happening in Asia with South Korea and China. And if you look at the long-term chart in AMD, we are breaking a downtrend line that began as sourced from 2000. So Advanced Micro Devices has been taking market share from Intel for a while, and we finally just broke above this 20-year resistance. AMD is a holding. I've had it since 21 bucks. We're now at 36 bucks. I think if we can continue to break free from resistance, we should have no problem moving up into the 50s. Plus, somebody was trolling me really hard. A couple of people are trolling me hard on Twitter saying it's way overvalued. I'm crazy to be long. And that was like back here. And we're still going. So it makes me have even more conviction to add. So I like it. Let's turn it over to Terry, and let's take a look at what we're doing in terms of sector rotation, which has been very, very key in this market. Terry, you are up, sir.
All right. So we introduced this tool that we're using from Optima, and the relative rotation graphs from Julius de Kemper. Now we have Julius, I think we've got him scheduled for next week, Todd. We'll bring him on as a special guest, and he'll probably tell me what I've been doing wrong. I don't think he's going to be next week.
We're going to try to get him 2 weeks. We've got not that Julius isn't special, but we already have a very special guest scheduled for next week. A very special.
All right, great. So after that, anyway, we do have the inventor of this relative rotation graphs queued up in our guest list. So stay tuned for that. So again, let me remind you the way this graph is put together. I have a monthly time frame, a weekly time frame, and a daily time frame here. I'm plotting the sectors. These are the sectors in the S&P. The x-axis is the ratio of the relative strength of the underlying instrument compared to the benchmark. In this case, the S&P is the benchmark. The vertical axis is the ratio of the momentum of the underlying indicator as relates to the momentum of the S&P. So this way you're able to take the time out of the factor and look at where these patterns are emerging. Okay, what we've found, or what Julius, I guess, has discovered in this, is that these patterns are rotate in a clockwise formation as you move forward through time. We have the tail on here. The tail indicates the history, so you can see where we've been in terms of history. This is a 1 month chart looking back 6 months, and you can see this is where we were. So we had the defensive sectors, the staples, utilities, and real estate all up here in this, what we call this leading quadrant. Healthcare, energy has been lagging forever. It's no wonder that it's down here in this red, this lagging quadrant. when stocks or move down out of this leading quadrant into this weakening quadrant, they're going to eventually rotate back up around. Okay, so we monitor these orbitals to see where we're at. So we know it's easy to see that, you know, taking a look at the energy sector, it gets a little harder when you're looking closer in time. Looking at the weekly here, let me tell you also, the circle that represents a 2 standard deviation filter. So anything that's sitting inside the circle is essentially operating the same as the S&P, or performing the same as the S&P. What we want to keep our focus on are these ones that are rapidly, look how rapidly real estate and staples are running away from where they were in the leading sector earlier this summer. Even utilities has been on a run for, we know, for a long time, but they've had their moment. Utilities is all moved down in the weakening. We got to keep our eye here on energy. Okay, energy is fast coming up into the improving sector. Now, if you just look at a chart of the energy sector XLE, I think I have that up on MotiveWave. Let me see if I can pull this in here. Let's look. I think I did a wave count here on energy. Okay. Now we're going to challenge my computer memory here and see how fast we can get this.
Yeah, it's
hopefully I didn't bomb the whole thing.
Yeah, it's a lot of system resources we're using.
Yeah, we don't want that.
And plus you're running optimal, which I think is a...
Okay, well, let's try not to jump over MotiveWave. MotiveWave looked like it's having a problem. But anyway, what I was going to show you is that you can look at, if you just simply look at the plot of the XLE, it's not a good looking plot, okay? And it would be hard, you would be hard pressed to say, I want to do anything with this right here, okay? So in this, let's bring this up a little bit larger for you guys there, okay? So this is a weekly plot of the XLE. Now this is color coded to the quadrants. So we were in a weakening quadrant, then we were in the lagging quadrant. Now we've started to poke our heads up here. This blue is telling you you've moved into the improving quadrant. So we could ask ourselves, have we seen the bottom in the energy sector? If we've seen the bottom in the energy sector, then we need to start focusing on what is contained in the energy sector. Oh. Uh-oh, Todd, did you take the screen away from me?
No, Bennett did.
No, that was an accident. You can grab it.
Okay.
You're cut off. Oh, I'll give it back to you. Hold on. Terry is now presenting.
That's the problem of having too many chefs in the kitchen.
That is such a nice picture of the skyline, though, Bennett.
Thank you.
You should be back up here, Terry, in a second.
Yeah, all right, we're back up here with the energy sector. So, what stocks are contained in the energy sector? This plot here shows you who is moving, who's really moving. Look who's already in the leading sector. This is back in the daily time frame.
EOG.
Okay.
I've been
EOG, Concho, Fang, Schlumberger, Halliburton. Their heading has turned south a bit, but they're still in this leading quadrant. There's a few of them we want to keep our eye on that are moving rapidly up. Now, on the daily rotation, these things can rotate rather rapidly. So if we're looking for longer term investments, we might want to be looking at the plot of the weekly here. And this is now using the weekly. Marathon Petroleum. Marathon has been a big outperformer. You can take a look at that one. Halliburton, Oxy. Here's EOG coming out of the lagging quadrant. Here's Concho coming out of the lagging quadrant. These stocks that are in this improving quadrant right here that are rotating in very long orbitals. You can see where they've been, very long orbitals. I would definitely keep my eye on for potential plays here.
Yeah, those are
one more thing. Let's jump over to industrials.
I was just going to say hit industrials quick, and then I want to bring Bennett in.
Yeah,
but I want you to do.
Yeah. So to me, there's not a lot I want to jump into in energy, but look at the same kind of performance. This is again the weekly in the industrials. look at all of these names that are rapidly moving through this improving quadrant up here. Caterpillar, we got to get something going on Caterpillar.
I'm watching Caterpillar every day.
On that.
It's already
Emerson
had the initial,
Electric.
Terry, it's already had the initial move out of this like weekly downtrend kind of bull flag. It had the initial move. I'm waiting whether we get continuation or if we get a pullback. Like this is such a good barometer of global growth, and this ties into the China story as well. Caterpillar is a key stock.
Yeah. Honeywell. Here's a plot of Honeywell. Honeywell too. Look at this. It's broken through its previous highs after its period of consolidation here, essentially all summer long. Caterpillar. There's the Caterpillar chart. Same kind of thing, right? So it's been real ugly for a long time, but it's starting to get impulsive moves higher.
Yep.
One more thing, and I'll give back control here.
Yeah.
Technology. So one new thing I was doing with this, Todd, is, so each of these sectors are actually broken down into industry subgroups. So when we look for, do we just want to buy the sector, or do we want to actually find the industries in that sector that are outperforming? So if you can see, we still have a lot of technology that's either weakening or lagging. Okay. The ones that stick out to me, here's semiconductors. This one here is semiconductors, and this one is software. So we've been on a run with the semiconductors recently, and we've been focusing and talking about those, right? So Lam Research, QRVO is just ripping to the upside. I think they had a big earnings beat the other day. Micron is doing well. AMD, Skyworks is starting to weaken. Texas Instruments, they're not in the game at the moment. Okay, so there's the play on the semiconductors. Here in the software industry of the tech sector, Salesforce, Fortinet, Autodesk, Adobe, these are the guys that we need to keep an eye on soon. So
very good.
Anyway, there's my sector analysis for you, Todd.
Very nice, sir. Very nice, sir. Appreciate that. Let's send it over to Bennett, also in Texas. Bennett's got a new segment. Pretty soon we're going to get you some nice flash intro, splash music, stocks in focus from our latest addition to the team, Bennett Tyndall. And it is all you, sir.
All right, so you kind of stole my thunder talking AMD earlier, but no, I'm just kidding.
That's a lead-in for you.
You're gonna be setting up and running the pre-production on the show soon, so pretty soon it's all on you, pal.
I love it. So you brought up a really interesting point about the break of that very long downtrend line there in AMD, and 3 weeks back we were actually looking at this chart, noticing this beautiful three-wave move right into a 61.8% retracement, a 61.8% time extension of time elapsed here in wave one. Beautiful five-wave move, came to completion with an ending diagonal. Had a little bit of a funky wave two. However, we had the previous fourth, support into the previous fourth. We were actually looking at this at 27, looking for a move higher in AMD a few weeks back. And let's see, we've put in a 35% move from that zone of support. So just an excellent chart. I think this is something that could very easily start pushing towards the 50s, as you mentioned, provided we continue to see traction in the markets, continue to see traction within semiconductors specifically. So this is one I still have exposure in, and I'm actually going to be looking to a pullback. I'd love to see a pullback and consolidation over that downtrend line that you had mentioned. Yeah. I think that would actually be an opportunity, provided we continue to see the markets looking constructive to get in a longer-term options position. And then Intel.
Hang on, before you go off of that, this is to you and Terry and Alex. You have an opinion. You guys are much more technically oriented than I am. Is there an appetite for an AMD at 50 to 60 in terms of their future products? Are they taking enough market share from Intel? Do they have the technology? They're an AI. Or whatever. If Alex's call, which we're going to finish up with in the crypto market, like, can we see a $50, $60, $70 AMD or no?
Yeah, I think AMD is definitely. Yeah, I think they're definitely on par with Intel. I think or in the early years, I kind of poo-pooed AMD processors, and I was an all Intel. But I know people that are running the AMD just as well, or sometimes even maybe potentially better performing. But yes, you talked about the emergence of AI, right? Artificial intelligence and the Internet of Things. Everything that we've got is becoming more and more computer literate, and the processing, the horsepower that AMD chips, and I certainly believe that they're well positioned to feed the market.
All right.
If you take into consideration the fact that GPUs have been so popular in crypto mining as well, if we get a wave 3 break in crypto, I think that's also kind of supportive of additional
NVIDIA. NVIDIA is my call for that one, though.
Yeah.
And basically NVIDIA was leading in that, but AMD is kind of catching up. So I think it's depend as regards of the cryptos. If we see this push upside, which we expect, I think also the graphic cards sales will boost.
And exactly right. And Alex, we're going to get enough time for you. We're going to stop. But let's not forget the semis broke out, I believe, before any index. And semis made a high about 3 or 4 weeks ago. And I don't think many people were talking about SMH at new high. So anyways, please continue, Bennett.
Yeah, last one here for you. I don't want to hold us off from crypto, but this Intel was another one I mentioned that, although it's not a significant mover, we had evidence of a post-triangle divergence, and we put in another 18% move there. I do think we're getting ready to complete green 3 of blue 3. We have a 5-wave move we can count here. This might be something with a 3-4-3-4 situation, maybe to get a butterfly on, but I'm still long the stock, and I'm going to remain exposed until we see evidence that the higher degree wave 5 has come to completion.
Yep, totally.
So just a quick update on those two for you guys.
Good work, sir. Very good. Alex has got some. Now listen, Alex, try not to give everything away. Alex is such an enthusiastic, talented Elliotician. He just loves to give it everything. I mean, save some of the best stuff for our members, okay, Alex? Contain your enthusiasm. Nah, I'm just kidding. Give him everything. Full and I love you. Full transparent. Just give it away. I got a text from my friend this morning, Alex, who's he's a prominent doctor in the area. He might be listening, and he's like your biggest fan. Like he's like, Alex completely nailed the long entry. He told me to wait. You had resting bids. You got filled in Bitcoin. So anyways, he just wanted to tell me props to you.
Thanks. I mean, if you like, I can stay on a daily, so I don't go into smaller details. But anyhow, the overall path is kind of behaving as we are running it from almost from the beginning here. So as I said, we have traded this all time long, even the corrective patterns we have traded along the way, and now we are long from 9,000 because. I think that this is going to begin to be a beginning of a new, at least measured move on the upside. The measured move will come around 32,000. 127 is there. So I'm looking higher for now. The intermediate push, which I'm looking for now, and we explained that yesterday in our member webinar, is a type of a corrective move. So as you can see, here is much of a sideways. So I think this is A triangle, B and C. I'm expecting a push lower. We're going to hold our longs, and we plan to add on a possible confirmation and break of this trend line on the upside. So I'm still kind of watching, and this also gives me heads up that we're going to go higher because this is a highly corrective thing, and I'm expecting a push lower. So to be clear, down to 8,500, maybe even lower. But from then, I'm expecting a reversal, and so is with other cryptos we track. Most of these patterns are the same everywhere you look. Maybe some of them like Ripple and Stellar, which doesn't have a high correlation with Bitcoin, looks different. But for example, if you look Litecoin, which already broke through this big trend line resistance, Maybe we're going to have a flash down in a flat, but I'm definitely looking higher at cryptos. So
yeah. So bottom lining is we're
yeah.
looking for a third wave. Alex is, we could say this. I think, Alex, you're incredibly bullish right now, aren't you?
Yeah, as you know, I always play conservative, but on a higher time frame, I like to confirm all of my Elliottwave thesis at one wave at a time. So my first objective will be if we get a push above this trend line, and there is a channel trend line of a larger degree. So if we overgo over these hurdles, my first target will be actually around from 26 to 30,000 for a measured move, and from there I'm going to continue to track. Are we going to go in a green wave 3, 4, and 5 to much higher levels? So I'm going to confirm it step by step.
Very nice.
So I like to go in any analysis like that.
Very nice. Good work. Good work. Good show, guys. So we have futures are just, everything's a little quiet here in the open. Good stuff out of Alex, Terry, and Bennett. Let's see here. Let me just do a quick little market check here. Everything's down a little bit, pretty quiet. Not very surprised there. So check us out at tradinganalysis.com. Obviously, we have a full service. This is just our weekly production, but we're at it every single day. So check us out at tradinganalysis.com. We have stock options, Forex, and crypto service. We're active with the software as well. Obviously, we're using MotiveWave software for our Elliottwave analysis. We're using Optima, as Terry showed us, for our rotation. I'm headed to Vegas very quickly tomorrow for the speech. They've got me slotted for like my third or fourth keynote. And I've got a pretty funny slide. Last week, or last year, I keynoted in Vegas, and it was me, Ralph Alcampora, and Sosnoff. And I've got a slide up there, and I've got a funny thing. Everyone was very bearish in the market a year ago. And you'll remember October down into December, the market sold off quite heavily, which, you know, they were right, but I was the only one of saying, guys, I think we're going to be higher a year from now. And it was kind of nasty for a while, but we've certainly rallied back. We'll see what the tone is. But I can tell you last year at the Traders Expo, the tone was very, very bearish. And if you think about it now, we're not all that bullish either. You know, you look at that Barron's big money poll, all the money managers, only 27% of money managers surveyed by Barron's are bullish right here. You know, as we just said, you've got indexes now at all-time highs, semis breaking out, interest rates are low, the Fed is mostly out of the picture. I think things are starting to get really interesting. So we're focusing on long stock positions, leveraging with options when we see opportunity. Alex is ready to go to town on Bitcoin if we can get the move up. Perhaps it'll coincide with sort of a risk-on, risk appetite that we have seen with the S&P. So I think things are exciting here. Things are very exciting. Obviously, you can see we've got a hell of a team built at Trade Analysis. So why not consider us for your research and trading analysis needs? Guys, closing thoughts, anything we left out, anything that's happening that needs to be said?
We didn't have that fundamental discussion, but next time, okay?
Next time.
Okay.
Next time we will, I promise. We got to have multiple shows. We're just trying to fit too much into one show. So I think there's even an appetite for Alex crypto only. Alex is, Alex has got a lot to say in the crypto side.
You got a webinar coming up, right? Don't you have a informational
webinar? Have you
webinar
settled on a
set
date
up,
for your
Alex?
webinar yet, Alex?
Yeah, I was waiting this Halloween to pass, so I'm going back and forth with Tristan. I think it's going to be around mid of November. From 9 to 15, we're going to pick a date. So it's coming closer in a week or week and a half. So definitely we will publish that for the final date, but it's coming in a week or let's say 10 days.
Do you want to settle on a date? And maybe do you want to like tell people, invite people to it, or you just want to keep it a secret? I'm joking. Let's get it.
Yeah, let's.
Come on, buddy. Alex, that's what I love about him. He's such a conservative. He's not a showman. He wants to be in the charts. He wants to focus on the market. He doesn't care about marketing and advertising. That's what you get a cheese ball like me for. Alex, you're doing a great job. All right. thumbs up, guys, on YouTube window. We'll get Alex's webinar date. Those of you, anybody going to be in Vegas? Let me know. I'll buy you a drink on trade analysis or coffee, whatever you like. Yes, we have a lot of questions to answer. We will be more interactive. There's a couple features that we will be introducing in the future to make it more of an interactive show, but we need to split it out, trying to fit too much in a show. So a lot more coming out of trade analysis in the future, guys. So thanks, team. Great job. And we'll see you in the member webinar in 23 minutes. And check us out at tradeanalysis.com. Okay. Thanks, guys. See y'all soon.
See you guys.